Greetings, candidates, and welcome back to the lesson. We are continuing with the topic budgeting and budgetary control. Today, we are going to study the different types of budgets, that is the master budget, the functional budgets, departmental budgets, and cash budgets. And budgeting, as we studied earlier on, is the process of creating a detailed plan for future financial and operational activities. And it involves setting financial goals and outlining how to achieve them over a specific period of time. So let's begin by defining master budgets, then we'll define the functional budgets, departmental budgets, and also the cash budgets. Now, a master budget, as the name suggests, is a comprehensive projection of all the organization's planned activities for a specific period of time. And a master budget consolidates all the lower functional and departmental budgets into a cohesive financial plan. So a master budget consolidates all the other functional or departmental budgets into a cohesive, unified financial plan. You understand? That is a master budget. And the process of developing a master budget begins with developing the operational budget. And it starts with the sales budget. The sales budget is the foundation, which is followed by the production budget, and then the budgets for direct materials, direct labor, manufacturing overheads, and also selling and administrative expense budget. So that's the starting point. Development of operating budget process. The process of developing a master budget begins, number one, with developing the operating budget. Develop operating budget. We have done the sales budget, the production budget, the direct materials budget, direct labor budget, manufacturing overhead budget, selling and distribution budget. That's all those budgets fall under the operating budget. That's the starting point. Then the second step in the process of preparing a master budget is the development of the financial budget. You then develop a financial. After developing the operating budget, you develop a financial budget, which includes the cash budget. Okay? The financial budget includes the cash budget and the budgeted financial statements, like the budgeted income statement, the budgeted, you have the budgeted balance sheet. So the master budget provides the overall framework for the financial control and performance evaluation. So to prepare a master budget, we begin with the operating budget, which you've seen includes the sales budget, production budget, direct materials budget, direct labor budget, and also we have the selling and distribution budget. Then the second step is to develop a financial budget, which includes the cash budget and the projection of the income statement and the balance sheet. So it is that simple, candidates. And in our subsequent lessons, we'll be learning how to prepare the sales budget. We learn how to prepare the production budget, direct material budget, as well as the cash budget. So let me, for the purposes of being clear, let me put down the budgets I've talked about. Here we have the sales budget, then we have the production budget, So we said the sales budget under the operating budget is the foundation. Then you have other budgets for direct material, direct labor. We have manufacturing overheads, budgets. Then there is a selling and distribution budget. These are operational budgets. Then the second step we said is developing the financial budget. Develop financial budget, which involves cash budget. Then apart from the cash budget, right, we have the budgeted income statement and budgeted balance sheet. Budgeted income statement, and we have the budgeted balance. So that's all for the master budget. Let's have a look at the functional budget. Functional budget. Now, the functional budgets are also known as operating budgets. They detail the revenue and expenses for a specific core business function. And functional budgets collectively make up the operating part of the master budget collectively. And examples include the sales budget, which is the starting point, and it forecasts the expected sales volume and revenue. The preparation involves forecasting demand using historical data, market research, and sales force input. So that's a sales budget. Function. Sales is a function. Okay? Sales is a function. Then production is also a function. So that is a sales budget, then production budget. Production is a function. And the production budget determines the required units to be produced. And the required units to be produced is based on the sales budget. The company begins by projecting how much or how many units they want to sell in a year. Then based on that budget, it's possible to come up with a production budget. You understand? Yes. The preparation involves calculating the budgeted sales units. You add the desired ending inventory, then you deduct the beginning inventory. That will give you the required production units. Then number 3, the third function, is the direct materials budget. Direct materials budget details the quantity and cost of raw materials to be purchased. Direct raw materials budget. And you can see the progression candidates. After coming up with the number of units to be produced, then out of this production budget, you can now draw a raw materials budget. It is based on the production budget and the required material per unit. Then 4, we have the direct labor budget. Direct labor budget calculates the hours and the cost of labor needed for production. This is the labor that is required in the factory. Then of course you have the manufacturing overhead budget. The manufacturing overhead budget. Manufacturing overhead. Now we know overheads. These are indirect expenses. Overheads are indirect expenses which are incurred in the factory. And this budget forecasts all indirect manufacturing costs like indirect materials, utilities, depreciation in the factory, and so on. Lastly, we have the selling and distribution. Selling and distribution, which forecasts non-manufacturing. This is selling and distribution or administrative. You can add administrative. Let me just say selling and administrative expenses budget. It forecasts the manufacturing costs like salaries, advertising, rent, and so on. So do you understand, candidates? The functional budgets, I repeat, these are also known as operating budgets. The same thing, operating budgets, which forms part of the master budget. It forms one wing of the master budget. They make up the operating part of the master budget, this part, and you can see the same items are listed here. This is selling and administration costs. The functional budget form part of the operating part of the master budget. So that's financial budget. Then we have departmental budgets. Departmental budgets. Departmental budgets, from the word department. Now, departmental budgets focus on the financial plan for a specific department within an organization, such as the marketing department, research and development department, human resource department, or a particular production center. And they often detail a breakdown of the relevant functional budgets, because departments are mainly classified based on functions. HR is a function, marketing is a function, research and development is a function, finance is a function. You understand? So they are often a detailed breakdown of the relevant functional budgets, and each department manager is responsible for their department's budget, usually controlling costs within a given limit. They detail the specific expenditures like salaries, supplies, equipment that are required for that department in order to meet its goals, which align with the overall functional and master budget goals. For example, you may have the marketing department budget, which would be a subset of the overall selling and distribution expense budget, selling and administrative expense budget, which details costs for specific campaigns, personnel, travel, and so on. You understand? So that's a departmental, focuses on the financial plan for a specific department. Focuses on the financial plan of a specific. So this is master budget number 1, functional budget number 2, departmental budget number 3. Then number 4 here we have the cash budget. Cash budget. Cash budget, as the name suggests, is a detailed projection of the company's anticipated cash flows, anticipated cash inflows, and cash outflows, which are also known as disbursements. So a cash budget is a projection of the company's anticipated receipts, which are cash inflows, and disbursements, which are cash outflows. Cash inflows, receipts, cash outflows, disbursements for a specific period. And its primary goal is to ensure the company has sufficient cash to meet its short-term obligations and to highlight any periods of expected cash surplus or deficit. It is a detailed projection of the company's anticipated receipts. It is a detailed projection of a company's anticipated cash inflows, also known as, and cash outflows, also known as disbursements. So if you are to have a look at the cash budget, there will be a section for receipts where the company is going to get the money or the cash. Then there will be a section for cash outflows. These are expenses or disbursements. There will also be balances at the beginning of the period. Balance brought down at the beginning of the period. You add the receipts during that period. You deduct cash outflows for that period. What is left is what is called balance carried down, which is the balance of cash at the end of the period. And in our subsequent session, candidates will be learning how to prepare the real cash budget. This is just an introductory lesson to all the budgets. This will be the end of our today's lesson, where we have defined the budgets, the master budget. We've defined master budgets. In the process of preparing the master budget, we've defined functional budgets, we've defined departmental budgets, we've defined the cash budget. So in our next session, we are going to learn how to prepare cash budgets, sales budgets, production budgets, selling and administrative expense budgets, and so on. So thank you for your time. God bless you.